Let's take a look at some charts on some price possibilities for the next link bull run. So when things get crazy and euphoric, it's always good to have a baseline, a true north ahead of time for some possibilities on where price could go. This is the Link USD chart, very nearing new price discovery zones. You can use a few things to sort of try to predict support and resistance levels ahead of time. One of those is Fibonacci Extensions. You pick a high, you pick a low, and it gives you a 1618, a 2618, a 3618, etc., etc., etc. And those can show you potential areas where price may find resistance on the way up. This is subjective, so that means you can pick any high, any low you want. Both of these highs and lows are projecting basically 650 as the next big level. So I'd expect that to have significant resistance on the way up. And then after that, around 970. So those would be the two levels I'd watch moving forward for Link. You know, if there is a bearish divergence going into that, if there's just weakness in general, if there's reversal candlesticks, that sort of thing on those levels, then there's certainly a higher probability that it's just going to consolidate or reverse versus continuation. This is just one example of how to use 1618 Fibonacci extension. You can see we have a chart pattern here on BTC. This is from 2018 to 2019. We have this ascending triangle, has a bullish reversal potential. So you find the high, find the low, it gives you 1618. You can add a measured move to that. But the bottom line is the minimum expectation if this price moves up is the 1618 Fibonacci extension. We can also use yearly pivots. So these are calculated on January 1st of every year based on the prior year's highs and lows. So you get your pivot, your R1, R2, R5, R infinity on the way up. And you can see price hit the R5 despite printing on January 1st. So the R5 in this case is probably 1250, something like that. Again, 7, 9, these are big levels to watch on the way up that match the Fibonacci extension levels. And you'll see as price condenses, as price volatility drops off, pivots will condense. And as price volatility expands, pivots will expand. So you can think of it as a ladder to use throughout the year. We start climbing the ladder, we find resistance, find support, find resistance, and eventually we just climb through it if there's enough bullish momentum. So in a vacuum, not too valuable, but using pivots with things like bullish or bearish divergences, exhaustion, momentum, that sort of thing, that's what I'd watch for these 7, 9, 10, 12, 50 levels. This is a MA multiplier. In this case, it's the half-year MA. There's just not enough price history to do a 2-year MA for Link. So I made it the half-year MA. You can see it picks up these lows really nicely. And really, when you first start to use this sort of thing, you want to look for back testing. So, you know, does it pick up the lows adequately? Does it pick up the highs adequately? Thus far, to me, this looks pretty good. One way you can trade this is wait for price to escape the oversold territory and add in the oversold territory. You know, DCA in, go hard in the paint when it explodes out of that oversold territory. And the opposite is true for overbought territory. You can set partial asks at this level, just blindly, or you can start DCAing out of your position, selling little by little, and then selling all of it once we start to break down from that MA multiplier. So right now it's projecting again around the $8.50 to $9 level. If this keeps moving up, these MAs will keep moving up just like they did here. So this will move up slightly, but again, that 9 level keeps popping up no matter which way we slice it with the math. This is Tesla, it's just some random stock just to show that this stuff actually is pretty useful for price discovery. So you can see Tesla entered price discovery when it broke 400 late last year. And this is 5 times the MA here, I think. Or is it 2 times? I don't know. It doesn't matter. The point is, like, what these MAs are is irrelevant. Whatever the back testing shows is the most relevant. So this was the 2-year MA. This might have been 2 times the 2-year MA. It picked up these highs here. It picked up this high before it even broke, you know, price discovery area. And now it's continuing to move up. So again, buy zone, sell zone. It also paints these nice patterns. If it's for some reason hard to see. This is a nice Adam and Eve. I saw this inverted head and shoulders here. There's not always a pattern, but it helps amplify any pattern that might be there that you won't otherwise see. Then lastly, just looking at the Pitchfork, this is just 3 points, an extreme high or low, and then a swing high, swing low, and you get this nice trend channel with specific rules. So you expect resistance down, or you expect support down here, you expect resistance up here. Again, another way to look at overbought, oversold territory. So on the way up, it likes this 1050 level. The median line is the expected price with a high degree of certainty should the trend channel remain intact. So as long as it holds within the confines of this, you expect it to retest this median line over and over and over and over again. So right now it's around 550. It'll slowly move up over time. So I really like the $9.50, $10 level as the next predicted high as far as what happens from here. You know, you just see 9 over and over again on all this math related TA.